Okay, good evening, everyone, and welcome to our live sharing classes. So, I want to thank you all for your strong support as the number of online viewers in our live sharing classroom is increasing. So, thank you all once again. Now, today is Friday. That means we have a weekend 2 days ahead of us. So, due to the market being closed for a day this Wednesday, there is some lack of continuity in trading this week. All right, so without further ado, and let's not waste anyone's time, let's proceed directly to our online sharing session for this evening. Okay, so content. So what is the content I'm going to be sharing with you today? So of course, we must conduct our daily market recap and analysis. Then I want to share with you some of the most commonly used trading techniques. Basically, the techniques that we will use whenever we conduct chart analysis. Now, although this one, it is a classic, not everyone will use them, or many investors only have a superficial understanding of what it is. So what exactly are they? We're going to reveal these shortly. So for those who want to seriously learn some techniques, patience and attentive listening is going to be required for this evening. Of course, we have more insights about Wall Street, which we will be continuing to share. Although the name remains the same, the content is quite different. As we all know, since its inception, Wall Street has been a place where talents and elites gather. The stories that have taken place there or the experiences passed down by our predecessors are enough for a lifetime of learning. Even if we only choose a small part for the in-depth study and ultimately apply it, it will greatly improve our trading success rate and overall profitability. So I'm just briefly mentioning it here. We're going to share the specific content later on. So stay tuned, be patient. Okay, starting into our market recap. So next, we first want to share certainly about today's market trends, some phenomena that occurred on the chart, and the reasons behind them. Now, today's market can be said to have surprised a lot of investors. The so-called surprise is because this morning, the market opened significantly higher, and then during a brief upward surge, we have once again refreshed the historical high. Now, following that, the scare also followed. So everyone should be aware of, after the index has simply set a new world high again, it immediately began a substantial downward adjustment. Now, of course, when I say the new high, I'm referring to our Nifty 50 index. So next, let's take a closer look at this index. Okay, so regarding the Nifty 50 index, I just shared a few words with everyone momentarily ago. So does anybody have anything to say about today's trend? Now, what I want to say is, although there was a major adjustment in the index today, there shouldn't be anything too shocking or too surprising for everyone. So, after all, it is not the first time that the market immediately starts to adjust downwards after hitting a historical high. I also shared with everyone in advance that in such a market or a trend, the greater likelihood it is to have a pullback after reaching the new high. And today showed that kind of trend. Now, from a technical chart perspective, it is clearly facing resistance at the previous high. However, it is important to note that the oscillating upward trend has not changed at all. It's just that after such a chart pattern emerges, it often puts a lot of pressure on traders' psychology. So why did the market make such a big adjustment today? Now, without any specific negative news, it indicates that this is the market's own demand. So after prices hit a new high, profit taking selling pressure always comes in. Now, I've always told everyone to buy on dips, sell on highs. When I just mentioned these two sentences, how many people here may not have felt much? So, can today's market performance give everyone a deeper understanding? Do you understand what it means to sell on highs? If you still don't have a deep enough understanding, you can observe the market more carefully in the future. This situation often occurs a lot of the times. Now, of course, it doesn't mean that it's always necessary to hit an historical high. For the Nifty 50 index, don't think that the medium-term trend has changed just because of a single candlestick chart. In fact, it hasn't changed. So due to the significant drop in the candlestick chart, according to a common trading strategy, the next step should be to wait for more buying opportunities. Now, as you can see on the graph, we are oscillating upwards. Okay, so you can see our trend line is going up. Next, let's continue to take a look at the trend of Sensex, right? So similar to the Nifty index, it opened with a gap up in the morning. However, unlike the Nifty index, the Sensex index did not reach a new all-time high. So after the morning surge, there was a significant amount of profit taking. So it dropped back down our price. So regarding the so-called profit taking, many may not fully understand. Just think about our actions in the morning. Weren't they also profit taking sales? Of course they were. Because after the price reaches a certain high point, profit taking sell becomes a natural necessity. This is all part of the stock market. We have to pick entry points, and then we have to take exit points, and then we find new entry points back into the same investments. Now, from the technical chart perspective, the Sensex index is still operating within a small upward channel. Now, even with the technical adjustment today, it does not currently impact maintaining this channel. Now, as mentioned earlier, at present, there are no major negative factors in the market. So the most significant current market influence should come from the fourth quarter earnings situations. So far, there have been no major negative surprises in the fourth quarter earnings, and with the fall in oil prices, it may help alleviate some downward pressure. So my personal view leans towards today's adjustment being a short-term market adjustment. It is expected to end within 3 to 5 trading days. Additionally, in terms of the Sensex index, the extent of the adjustment should not exceed the lower boundary support line of the upward channel. Since the adjustment has occurred, it is still advisable to avoid all these opportunities to sell high during the trading day and can be taken an exit in stocks. Now, due to today's adjustment, some stocks may be trapped or incur slight losses. What do we do in such case? Simple. As long as it does not disrupt the bullish trend, we can always continue to hold. So, while sharing market insights, I have also shared corresponding strategies. So you can consider these alongside your own trading situation. On to some macroeconomic news. Okay, so we just finished reviewing and analyzing the Nifty 50 index, as well as the Sensex index and the overall market situation. Now, I hope it was helpful for everyone. And of course, I certainly hope that we can eventually form our own unique views and opinions. So here I can clearly tell everyone that the stock market is a place where individual heroism can be demonstrated. As long as you are strong enough, you can realize your own value in the stock market and ultimately achieve financial freedom. The stock market is also a place that does not look at personal academic background, social background, family environment. As long as you have the ambition and the work ethic and you work hard enough, you can completely succeed through your own efforts in this place. So this is unmatched by other industries. So This is slightly off topic. My apologies. Let's continue to focus on financial events and the news in the market. Okay, so let's first focus on financial and economic news from India domestically. Now, PMI shows India's factory growth slowed in April, but it remains strong. Now, a business survey on Thursday showed that the growth of India's manufacturing sector slowed slightly in April, but remained strong due to the robust demand, prompting businesses to increase raw material purchases at almost a record pace. As the third largest economy in Asia and the fifth largest economy globally, India is the fastest growing among the major economies. Aren't you happy to hear this data? Proud even. I can tell you that I feel very honored, and personally, I believe that Japan and Germany, who is currently ahead of us, will soon be passed by India. Now, of course, strong economic development also requires strong consumption to keep up with this pace. The gross domestic product, GDP, for this fiscal year is expected to grow by 6.5%. HSBC's India's Manufacturing Purchasing Manager Index final value, opening the new tab Standard & Poor's Global Company Indices, S&P Global, compiled the index for April, dropping the 16-year high of 59.1 in March to 58.8, so lower than the initial estimate and unchanged from the previous month. Now, although this data may seem somewhat soft, it still remains above long-term average level and has been in the expansion zone for 34 consecutive months. Just now, we saw that the value is 58.8, while 50 is the dividing line between growth and contraction. So everyone can also see that our value is far above the dividing line. Now, some people may not think much of these values, but I believe that's incorrect. So guys, do you know the significance of looking at these data? In fact, it's very, very simple. To observe the trend of economic development, as we all know that once a trend is formed, it is not easy to change. So if India's economic development continues to be positive in the long term, will there be any issues with the overall direction and trend of the stock market? Definitely not. At most, there will be some medium-term and short-term fluctuations. The overall positive trend will not change. Therefore, from this perspective, everyone can be completely assured. All right, now let's turn our attention to relevant financial and economic news from the United States. So, weak US productivity could threaten Fed's soft landing hopes. So, according to the latest reports, weak productivity growth in the first quarter in the US could pose a challenge to the Federal Reserve's effort to tackle inflation without causing a painful increase in the unemployment rate. If the economy further slows down, price increases may stagnate. So the significant growth in worker productivity last year helped drive rapid economic growth, with employment remaining strong. While inflation actually decreased, however, data for the first 3 months of 2024 showed that the worker productivity grew at an annual rate of 0.3% compared to the growth rates exceeding 3% in the previous 3 quarters. As a result, unit labor costs surged by 4.7%. That's the fastest in a year, as businesses allocated higher wage and benefit expenses into relatively small increases in output per person. Now, Federal Reserve Chairman Jerome Powell is very sensitive to these issues, as seen in Wednesday's press conference, where the Fed kept the benchmark interest rate steady within the current range of 5.25% to about 5.5%. Now, the Federal Reserve may be unwillingly to further raise interest rates at the risk of harming the economy to achieve the last bit of inflation control. Powell remarked that recent strong inflation data suggests that the first rate cut could take a long time. Powell's remarks or implications suggest as a much less aggressive stance compared to earlier, as the issue of raising interest rate was previously mentioned, but now it seems the issue is more about when to cut rates. Now, while the Fed indicates that the first rate cut may take longer, personally, I hold a little bit of an opposite view. So, believing that a rate cut may come earlier than the market consensus. So, why do I have this judgment? Because such high interest rates will further increase the cost of funds for many businesses and organizations, possibly to unsustainable levels. If such high rates persist, even the US government could potentially face bankruptcy. Now, this point may be hard for some people to understand, but remember, the US government debt also faces great interest pressure. So, can we all understand this one point? I leave this question for everyone to kind of ponder and think about on your own. All right, next up, let me speak to everyone again about this large-scale event of Battle of the Four Titans for the Asia Pacific headquarters site selection. So this is initiated by our company's headquarters. Although our event has only just started 2 days ago, we are getting many people have shown their support. I personally appreciate everyone's support very much, and on behalf of my company as well. Now, currently, the event is being planned and executed by our Indian team. Now, why does the headquarters hold such an event? Organizing such activities also incurs costs, such as investing in manpower, resources, and financial costs. So please don't forget, the experience funds provided for everyone to use for free also have a cost. And to be honest, even though the funds are ranging from about 10,000 to 50,000 rupees, it may not be large, but with the amount of membership base we have, when you pull all of that together, the cost is certainly considerable. Now, why does our company do this? Of course, it is closely related to our company's comprehensive entry into the Indian market. We need a broader market aiming to be the best in Indian industry in terms of cost. Another important aspect, as I have always mentioned, this is our way of giving back to the vast investors who support us in the Indian market, as well as a way to give back to all of you who have supported us. So during this time, please continue to support us while experiencing all our services. And in order to achieve the wealth growth plan, let everyone see our profit-making ability. Now, of course, this profit-making ability will indeed bring profits to everyone. Please note that the profits gained from using interest-free funds for trading belongs to everyone. After the phase of competing based on support number ends, everyone can withdraw a portion of the profits as a return for supporting us. Now, regarding why the company is holding such an event, it is the starting point from the strategic perspective of the company's development. And regardless of any economic organization, India is very appealing investment first choice region. Now, I'm not going to elaborate more on this aspect. Some members may not quite understand. That's okay. But if there is anything you do not understand, you can contact my assistant for consultation. And of course, you can always reach out to me. Now, what do I want to say? I want to say that the company pays great attention to and has high expectations for the Indian market. Otherwise, we would not have started the preliminary entry into the Indian market last year. So such feedback activities also show that our company's investment in the Indian market is sincere. And we come to India with a cooperative attitude and we're ready to fully settle in. Now, from my personal perspective, the decision to return to work and develop in India is partly related to my birth in India when I was young. I want to take this opportunity to achieve another breakthrough in my life. And I also want to give back to India. So after so many years of wandering abroad, I've always wanted to do something for my home. So in fact, everyone should not simply think that the company is paying for no reason, right? At the very least, with the hosting of this event, the influence of the company in India will greatly increase and market share will certainly increase. If a company in India can successfully compete with Asia Pacific regional headquarters, then the headquarters will allocate more resources and the speaking rights of the India company will be greater. Thus, being able to bring better services and more high profit opportunities to everyone. For me, personally, if India successfully competes for the Asia Pacific headquarters, I will also achieve a huge leap in my life. This is a multi-benefit activity and ultimately a win-win result. So please vote and support generously. Thank you. Now, as for the details of this event, I don't want to talk too much more about it, but there are still some people who are not understanding it very clear. So I'm going to explain it again today. So number one, the period for counting the support numbers for this event is from May 2nd to May 10th. Now, after May 10th, the support numbers will no longer be counted. So in fact, the time is not long. We have about a week left. Now, whether our Indian region can secure the locations of the Asia Pacific headquarters, in the next few days, the support of each other will be a very, very important factor. Number two, during the support period, everyone may receive experience funds ranging from 1,000 to 5,000 rupees for trading use. Until the end of the support count, all trading profits belong to everyone. 10,000 to 50,000. Now, for everyone, there is no risk, only profit. It's just a matter of how much profit. Now, I would like to reiterate that regardless of how much profit is made during this period, the profits belong to everyone. However, the interest-free experience funds still belong to the company and cannot be withdrawn. The company will need to recover these funds at the end. All right, I'm not going to talk too much more about this event anymore. All the members who have opened an account and received experience funds can contact my assistant for consultation, account opening, and receiving experience funds. So you have already seen the profit results today. Next week, we're going to continue trading stocks and subject to these UC limit stocks. So don't miss out on such a profitable opportunity. So once again, for all the people that have missed this before, right? This started on the 2nd of May, which is yesterday, and it's going to end next week on the 10th. So this is the time period where all the numbers are going to be counted for, right? Now, during the support period, everyone may receive, it's going to be a range, right? Between 10,000 to 50,000 rupees for trading use, okay? Keyword trading use, okay? So not going to dwell on this much longer. We're going to be jumping into Wall Street Insights. So next, let's take a look at the next part of the content. Now, even though we've been talking about this topic for a long time, the content shared each time is actually different. So we learn from different people, different events, and different experiences. Not everything is necessarily suitable for us, but if we don't go through extensive learning, how could we know this point? So I believe that the experience accumulated by the predecessors on Wall Street or in the market must have a role for us to learn from. It's just a matter of whether we have truly hit the right spots. We must never think that certain content is outdated. It's impossible because even though people in the market may change, and even the specific types of trades may change, human nature remains constant. The greatest enemy for traders is also constant. Okay, so let's continue with our Wall Street insights. So, first point tonight, do not average down. Okay, so what does it mean to not average down? It means that when our stocks are in a disadvantageous position, we should not continue to buy more stocks at lower prices. Now, because when you need to average down, it simply means that the current stock price is already lower than your cost price. In the market, many investors make mistakes, not admitting their mistakes honestly and starting over, but instead hoping for luck, averaging down to lower their average purchase price, hoping that a slight rebound in the stock price will recover losses or even make a profit. Now, this is the common thinking and practice of most people, but the vast majority will end up failing. Now, I have even found that a very small number of members started averaging down when the stock has very little fluctuation, which is meaningless. If you keep averaging down like this, when you find better trading opportunities in the market, you're not going to have available funds to take advantage of those new opportunities. So let's give you an example. If you average down 10 times and out of those you safely sold the stock 9 times, even making small profits, but the remaining one averaging down you fail to exit smoothly, then it's highly likely that you may end up eroding the profits from the previous 9 times or even incurring losses. Now, another way to put it, after the first entry, if there is no profit on paper, do not add positions. If there is a profit on paper, it means your initial entry was correct, and you can expand your gains, make appropriate additions. Otherwise, immediately cut losses and exit. Look for another opportunity. Everyone, please take a moment to think about why this is so. The principle is very, very simple. There's going to be tons of opportunities on the stock market. Don't be so glued on to one if it's not making you any money. So do not average down. Okay, the second point today is plan your trades and then trading your plan. Now, whether you are a novice or an experienced stock trader, before trading stocks, you must know what you are doing. For investors, one should consider more of a how rather than asking for the why when we buy stocks. How should we react if the market does not move as expected? It's best to write down strategies for such situations. Now, these strategies are usually from medium to long-term trades. The strategies for short-term traders may differ because of the different trading periods. Short-term trading tests the traders on the spot response more. Now, especially for beginners, a few days after entering the market, they may not remember their thought process when buying the stocks. Once there is price fluctuation, they may not know what to do. Now, this is completely due to lack of pre-planning. If there is pre-planning at the beginning, of our trading plan may not be very perfect. With increasing experience, you will continuously change your methods, just like a spiral. After going around once, you seem to be in the same place, but you have actually moved up a level. Methods can be modified. They must be modified with the accumulation of experience. The important thing is to always have a method and use it to guide your actions. So one of the most common mistakes beginners make is the lack of planning. They buy stocks casually, and then once they have bought them, they have no clue how to track them. They have no idea what to do with it in specific situations. So, my friends, are you one of these guys? If you are, start changing now. We have time. Hurry up, learn, and set your own plan. After long-term trading, learning and training, you may becoming an outstanding player later on in the industry. So no matter what we do in the stock market, we always have to execute a plan. When we buy a specific stock, we look at entry points, we look at exit points. If we were to make a plan, are we planning to do short term? We plan to do long term? Or are we doing midterm? Now, these are the things that we have to look at, digest, and then come up with a strategy when we enter the stock market. For instance, if we see a stock that is a long-term bull, then we're going to set some money aside that we're going to be investing for the long term. So then we would know what to do when it hits our price point, right? Okay. So during the time coming up today, we're going to be learning about content related to oscillation and breakthrough. So of course, there is quite a lot of content on this topic, so it's not going to be possible to cover it all in one evening. So we can slowly study it in batches. So why are we sharing with you this content today? Mainly for 3 reasons. Reason number 1, many people have studied this content before, but there are still many points that are not very clear. And they often ask me to share more about the techniques and the methods in this regard. Of course, personally, I believe, especially in the concept of breakthrough, if you grasp it well, it will greatly enhance our profit-making ability. And personally, I really like to operate on trading opportunities after a breakthrough. And then number 2, experienced traders know that the oscillation of the market is an inevitable topic or trend in our trading careers. Now, because any trading instrument, no matter which stock it is in an oscillating trend for most of the time in a year. Even if a stock is a big bull stock, the time spent in smooth upward trend is still not as much. Most of the time, it's still in an oscillation. So how to deal with oscillating markets is one of the standards to test a trader's technical ability. And then number 3, we all know that trading is challenging in oscillating markets, but not impossible. So that's very important. It's not impossible. It is possible to make money in oscillating markets. It just requires a bit more effort. The greater profits often lie hidden behind the breakthroughs in oscillating markets. So this requires us to first be able to identify oscillating markets and then profit from them. More importantly, it's about capturing the great profits after the oscillation. Okay, so let's take a look at the first question, right? Now, what kind of market is a volatile market? So everyone knows that the stock market is a complex system composed of various trading entities. Now, among them, trend trading is the soul and core of trading operations. If you can adapt to the major trends, trading will become simple, and making money will also become easy. Now, regarding trends, we have shared a lot of content with everyone before, so its importance need not to be emphasized further. Now, in contrast to clear upward or downward trends, the market often operates in a state of unclear direction, which is also very, very common. Now, this common state of market direction uncertainty is called a volatile market. So as everyone can see on our slide, it's very easy to understand what a uptrend and a downtrend is. So uptrend, of course, the prices is going upwards ratherly fast. So you got a higher high, then a little bit of a low, then a higher high, a higher low. And then downtrend is going to be flipped completely the other side. So it goes from high to a lower low, and then it goes to a lower high, and it continuously goes downwards. So uptrend, downtrend, and then we have sideways, right? Okay, so in our daily trading life, we often come across or talk about a term called oscillation or fluctuations. So many people may already be familiar with it, but have we ever paid attention to the differences? even in the same oscillating market, what are the differences between them? What are the different types of patterns in an oscillating market? So, in the practical process, we often encounter several types of oscillation patterns, including rectangular oscillation, then we got the flag-shaped oscillation, and then we got the triangular oscillation, and then we got the wedge oscillation, diamond oscillation, and so forth, right? So now among them, the rectangle, flag, and triangular oscillations are the easiest to recognize and the most distinctive forms. So therefore, I will continue to share with you on this topic. So make sure you pay attention to our live sharing classroom, and then we got to keep learning consistently. So as for the wedge oscillations and the diamond and the rhombus, due to their relatively low occurrences probability and the narrower range of trading prices, we're not going to elaborate too much on these two patterns in the later stages, okay? So as you can see, each of these type of oscillations, we have a little diagram. So what happens is when we kind of draw over the candles, these are the kind of shapes on the graphs that it makes. So the rectangular one's quite simple. It's just a rectangle. Then a flag, it has a flagpole. It has a rectangle, but kind of on a slant, and then it goes up. And then the triangular one basically means it makes a triangle at the end. Okay, so that is how, if you were to draw it out, you can differentiate which pattern of oscillation you are currently in. And today we're going to be going over the first three. They're very easy to recognize. I'm sure most of you have seen some sort of drawings like this at one point or another. Now, the next important issue is coming up. I believe many people here are aware that the financial markets, regardless of the trading variety, the technical patterns displayed most of the time are in a sideways market. Now, as professional traders or professional investors, we cannot afford to ignore sideways markets. So therefore, we must learn to profit from sideways markets. So how can we profit from these sideways markets? I understand and deal with this question in two parts. So first, even in sideways markets, many times there will be price patterns such as rectangles, triangles, flags, wedges, etc., which all belong to sideways patterns. In the process of forming these patterns, the profit principle is to buy low and to sell high, of course. This is just a principle. Now, there are many specific trading methods which require us to continuously accumulate experience in future trading processes. Now, of course, I will also share some insights with you. It is worth noting that these profit methods generally yield relatively small absolute profit margins per trade, which can be continuously increased by repeatedly trading. Secondly, it is to anticipate the direction of the market trend after a sideways market and seize profit opportunities. A sideways market is a market correction. So after a sideways market, once the market chooses a direction, there will be a big trend of uptrend or downtrend. By judging the market trend and capturing the buying points, one can catch big trends, thus big profits. Now, like the classic sideways patterns I mentioned earlier, they mostly act as a continuation pattern now during much of the time, meaning they generally indicate that the price will continue to previous trend. So this makes it more advantageous for us to capture trading opportunities. Okay, so this is kind of like the shell of the oscillation, the patterns, how we can recognize it. So this is going to be a framework, a fundamental. There's going to be in the future parts where I pick apart some of these things and then we dive a little bit more in depth. I always recommend people, study some of this by themselves, or if you are more intrigued, poke around, find some rectangular oscillation, and then on a graph, or try to pull out a graph and see if you could find some of these on those graphs, right? So these are all things that we teach you, and then you should go and try to apply it to some of your trades. Okay, so as that's going to wrap up for the oscillations and breakthrough for today. Next, we're going to start going over some of the stocks that we have recommended to everyone before. So we always like to kind of wrap up the evening with a stock analysis, kind of just track where we are, what's been going on with some of the stocks, and so forth. Now, although we are now focusing on trading stocks that have upper circuit limit stocks for the price increases, we are still going to continuously monitoring the stocks we shared with you earlier. So regardless of the profit or the loss situation, we're going to keep tracking them until the end. We're going to take responsibility and find a proper solution. So this is why I continuously say, just rest assured, we follow all the stocks that we put out. Everything that we do, we follow it very, very tightly, right? So next, let's move on to the time where we go over these stocks, okay? Okay, so first one, we're going to take a look at the NCC. So that's NCC Limited, right? So we can notice that today the market experienced a significant adjustment. But the stock of NCC didn't change much at all. Although today's candlestick chart shows a decline, everyone can also see that the closing price today is not much different than the previous day's trading day's closing price. So what does that indicate? What does that mean? It shows that the stock itself is resistant to decline, indicating resistant to downward movement. So it just means that it's tough. It doesn't want to go down and it's holding the line. The main reason is that on one hand, this stock originally is a great long-term bullish stock. And then on the other hand, the stock has already undergone a previous adjustment, meaning it adjusted ahead of the broader market. So it is normal for it to show some resilience to declines now. So looking at the technical chart, the low points of the past 2 trading days basically tested the low point of April 19th, indicating a test of the previous low support level. So April 19th is quite some time away. There's a little bit over about 2 weeks. Now, currently there is a possibility of forming a double bottom, a small double bottom. But this would need confirmation by the market again. So this stock is still maintaining a bullish trend. So for those who have already bought the stock, they can continue to hold. If selling is needed later on, we're definitely going to notify everyone. Even if the stock eventually incurs losses, I will make sure to help everyone here recover their losses. It is early May now. In fact, our overall profits for the entire month of April was very substantial. So I believe our long-time members who have been trading with us are very, very clear on this. So let's not talk much more about this stock. Let's move on. As I said before, over and over again, NCC Limited is one of these long-term bullish stocks. So don't worry too much about the price. We're going to hang on to it. When we find a nice exit point, we're going to exit. Okay, so on to the next one, which is the LT. So we got Larsen and Toubro Limited. So the adjustment range of the stock today is a little bit large. So closing down 2.77% during the day. So technical charts perspective, there are two previous lows forming a support line. And today, the price had already come near the support line itself. So I personally believe that the support strength of this support line will be relatively strong. So it's not easily going to be breaking down effectively. Now, in the future, if there is a situation where the support line is broken, it is very likely to result in a false breakthrough during the day, which means it may drop below during the day, but then recover at the closing. So we also have to keep in mind false breakthroughs gets people into a panic mode, right? So even though if it's going to break a little bit, don't worry too much. It will rebound before the end of the closing day. Now for this stock, it is recommended that we continue to hold as well. So even if you want to sell, I'm going to tell you it is not advisable to sell at the support level. Now, on the contrary, from a trading strategy perspective, the support level is usually a buying opportunity. As long as the stock price is clearly supported at the support level. So there's not much more I want to talk about this stock. It is another one of those long-term bullish stocks. If we look at it from a bigger view, it's been going on a upward trend in the long-term indicators. So in terms of trend line, there was a few rebound few days ago, and currently it is just a consolidation phase in the rebound process. So there's no need for worry. Don't panic. My recommendation, we're going to continue holding this long-term bullish stock. So that is what it means when we say long-term. We kind of tuck it away and then we just wait, because in the long term, it has shown positive results. Okay, so last one for this evening. We're going to be taking a look at Reddington Limited. So I'm not going to go over too much fundamental situation on this stock, as we've already discussed it several times. Also, there have been no changes in the fundamentals. So let's just quickly jump to the technical chart. So the characteristic of this stock today is also its resistance to decline. So very close to our first one of the NCC. It just doesn't want to go down. It doesn't want to go on a downward trend. It just won't break, right? So even with a significant adjustment in the index, the closing price of this stock today is almost the same as the previous trading day. So with just a minor decrease of 0.09%. Now this magnitude can be considered negligible. So technically, this stock is a long-term bullish stock with no changes. Currently, the stock price is at a higher level and is undergoing consolidation. So if we want it to rise, we gotta give it time, as this is the nature of the stock. So this is another long-term bull stock, but this one, we're gonna have to give it time. It's undergoing its consolidation phase, so we just give it time, let it brew. So looking at this chart, everyone should be familiar with this uptrend line. Now this trend line is steadfast. So everyone should continue to hold this stock patiently. Same with the NCC, right? If there's going to be any trading done, we're definitely going to notify everybody in advance. So don't worry. If it's time to sell a stock, we are always going to make an announcement before we sell the stock, when to sell, etc. Right? So I'm going to emphasize that we will take full responsibility for any of the stocks that we recommend. So don't worry. All three of these are going to be our long-term bull stocks. So hang tight onto them. That's it for now. So that is going to wrap up our analysis for the stocks. The stock market is going to be closed for the weekend. So, a little bit of a break, but that doesn't mean we stop taking a look at market information, right? So everyone, that is all for today's online course. There's a lot of content that we covered today, so please go over the content again, memorize it so you can apply it to all your real life trading strategies. Quick reminder, thank you for all your continuous support. Our ultimate goal is to get the Asia Pacific headquarters here in India. So make sure you sign up, give us a vote, continue to support us. I thank you very much from the bottom of my heart. And hope we get some good results. We still have 1 week left. And you know, it doesn't mean you're doing it for free. There's going to be a chance to get from 10,000 to 50,000 rupees trading funds. So make sure you guys grasp that opportunity. Our next online live broadcast is going to be scheduled for this Sunday, May 5th at 8 p.m. So I hope to see everyone here again. Thank you very much to everyone for the strong support, and I'll see you all next time.